The interest versus principal payment is now going to be shifted significantly. That creates more harm that people don't see. Most Canadians will get their renewal and go, my payment's up $400 to whatever dollars per month. That sucks. That's what they're going to focus on. 5-year 2% mortgage rates were almost like rent control. You were getting it so good before.
Merry Christmas from the Tom Storey Show. Steve and Tom with blessings that gently flow. Real estate and comfort in the homes you know.
Tech savviness.
And peace
Well, we
in
gotta be in the Christmas spirit.
Can I start off with, before you do the intro? Can I start
Okay,
off
yeah.
with a Christmas riddle?
Okay, yeah, go for it.
Okay. In the song, or movie, I guess, Rudolph the Red-Nosed Reindeer.
Mm-hmm.
What was the other reindeer's name?
All of them?
Close.
Mm-hmm.
You're actually the closest answer I've ever had.
What was the other reindeer's name? All of the other reindeer.
You're the
I don't
first
know.
one ever. You're the first one ever. The
Really?
other name, yeah.
Did I get it? Olive.
Olive was a bit of a bully. Anyway, Merry Christmas, everyone. Now you can do your intro.
Christmas. We are in the Christmas spirit here today. We've got Steve the Grinch, and we got Max the dog over here. Against all my will, I am wearing this today. It also did come with a collar, which I refused to wear, mostly because it would choke me if I tried to put it on. But just so our visual people on YouTube can see that I do have Max the dog's collar. Welcome to episode 191 of the Tom Storey Show, a holiday special episode. We're excited for all of you to be here. Thank you for being here. And we got a whole lot to talk about today. We got a lot of fun topics. We're going to do a little bit of fun trivia actually about this show, so the people that come back every week play along with us. Steve has no idea what I'm going to ask him. I've got all the questions in a separate note. And we're going to have a lot. It's so creepy, Steve, that your thing came with the hands, too, with the Grinch. But this is our final call. The one thing that you could give me and Steve for Christmas is if you are not subscribed to the channel, because only actually 36% of people that watch our content are actually subscribed to us. So if you can do that, that would be our Christmas gift. We'd love it if you could help us get to 8,000 subscribers by the end of the year. Steve, I think we can do it. I'm going to stay optimistic. I think it's very doable over the next few episodes.
I bet you it happens on Christmas Eve.
On Christmas Eve. There you go. So if you see we are at 7,990 something, make sure to get subscribed. Put us over the edge. All right, Steve. What are we talking about today? We got a lot of fun topics today. I was actually thinking that maybe it would be fun to start with. I can't even take myself seriously.
Yeah, just take off the nose and just leave the antler on your head. That'll make you more serious.
I'm happy to leave my my dog ears and my antler, but I want to get right into it today. We got a lot of different topics that we're going to talk about. Merry Christmas, everybody. Happy holidays. I know this episode's coming out, I think December 21st. This one comes out, Steve. So we're heading into like Christmas week where everything shuts down. You got any fun holiday traditions that you're doing with your family, Steve?
Well, we're living in the basement right now. So
right. So Christmas in the basement.
Tree and everything's in the basement. It hasn't been as bad as I thought it was going to be. We're all sharing a room. That's interesting. And I'm making a new tradition. We're going back to Tucson this year. So for New Year's, we did Tucson last year. We're doing it again this year.
Okay. For New Year's, not for Christmas.
No, we leave a couple days after Christmas.
I got a New Year's wedding this year, so I'm pretty excited about that.
Really?
Yeah. New Year's wedding, downtown Toronto.
New Year's Day or New Year's Eve?
New Year's Eve, not New Year's Day. Yeah, New Year's Eve. Yeah. So I'm excited about that, but we're not traveling. We do something with like our extended family. We're on the 24th. We'll go out for this big like Christmas Eve brunch together, and that's always fun. So let us know in the comments what your tradition is for the holidays, whether it's Christmas, whether it's Hanukkah, whatever you celebrate. Make sure to let us know what you do as your tradition below. All right, Steve, we got lots to talk about this week. And for the people that don't know, we've spent about 45 minutes before even starting the show with the craziest technical difficulties we've ever had. We're filming on a brand new platform today that we have never used before. And I think Steve found it quite funny to watch me get frustrated trying to figure this out this morning, because I try to stay typically calm, but yeah, technology has annoyed
Tom Storey's way, and then Tom gets a little
technology
crazy.
got very annoying this morning. All right, topic number 1 for this week. Steve, I don't know if you saw, but I put out a video last week or 2 weeks ago on my channel where we talked about this upcoming mortgage renewal, because a lot of people that locked into those lower 1.5% to 2.5% rates in 2021, early 2022. Well, the first big batch of them are going to come up for renewals in 2026, and then the second batch like kind of early 2027. And most of these people are going to go from rates that were in the 2s, if not lower, to a rate that is closer to 4. Maybe you get a 3.5% rate depending on the situation. But for most people, you go from a 2% rate to a 4% rate. That is doubling your interest rate. Now, the last time that we had Doug from BMO on the show, chief economist, he said that it's not a mortgage renewal cliff anymore. It's more of a speed bump. And I think that's probably a pretty good way to put it. But I wanted to give the viewers of the show some actual data, because a lot of the like bigger news stories that have come out about this have basically said that most people, there's a small percentage where the payment's going to be 20% more than they were paying now, but most people are going to fall somewhere between 5 to 20% increases on what their payments are going to be. But I want to bring some extra value to the show today and give you some real life examples using real numbers, showing you what's happened in the first 5 years of their mortgage. And I've got 2 case studies here. One's with an $800,000 mortgage that started in 2021, and one is with a $500,000 mortgage. Maybe, Steve, if we have time, I'll send you screenshots of this and you can put it on the screen for this part if we remember to do it.
But tell me.
Yeah, I'll remind you. I had this all set up on my old program, but I don't know how to do it right now. So here's basically the point I'm trying to make here. Mortgage renewals are very real, and Canadians are going to be paying more for the exact same house with their upcoming renewal. Is it this crazy bad thing that's going to cost people thousands of extra dollars per month like we were talking about it previously? Probably not in most situations. We were in a situation 2 years ago where you would have gone from a 2% rate to about a 6% rate. Now we're going from a 2% rate to about a 4% rate. So I want to give you some real numbers, and the point I'm trying to get across here is payments are going to go up for everybody in this situation, pretty much everybody. I don't think the payment difference is going to be the thing that is going to shock you the most. I think it's going to be where the money is actually going. And that's kind of what I want to get across here. So, example number 1. The first mortgage is assuming that you got an $800,000 mortgage at some point in early 2021, and you got it at a 2% rate. So a 2% interest rate on $800,000 mortgage to start off that mortgage, your monthly payments were $3,393 a month. Over that first 5 years of your term, if you average out all the payments, the amount you paid to the initial loan, because your rate was so low at 2%, was $158,715.
Okay.
So over the life of that mortgage, it changes because as the loan comes down, every payment slightly is different. But over those first 5 years, or I shouldn't have said life of, over the first 5 years of that mortgage, that first term, almost more than 70% of the payment is going to the initial loan. It's very, very good because of how low the rate is. In that first 5 years, the interest that you paid on your 2% was $44,882. So you are coming out of these first 5 years with a balance on your mortgage of roughly, I'm rounding here, roughly $640,000. So you started at $800,000. After your first 5 years, you're at $640,000, and now you're going to be renewing from a 2% rate into a 4% rate. I used 3.8% on this example on the rate that they were renewing into, because I think most people can find rates under that these days.
Yeah.
So now heading in to your renewal at a 3.8% rate, your new monthly payment would be $3,810. That means that your payment is being increased on a monthly basis up 12.3% or $417 per month difference.
Mm-hmm.
Over a year, over 5 years, that adds up to a lot more money. Now, do I think that most people can absorb that? Probably. Not everybody. It will really put some people in bad positions. I think most Canadians can figure it out. The biggest difference to me, sure, we're going to talk, every news outlet, media is going to talk about the fact that mortgage rates are going to, or not the rates, but the payment's going to go up between 5 to 20% depending on your situation.
Yeah.
In the next 5 years, you will pay $110,000 to the initial loan, to the principal. But because the rate's now at 3.8%, not 2%, you'll be paying $118,000 to the interest. So even though the rate doesn't sound that crazy, 2 to 3.8%, yeah, but you're doubling. And if you look at like starting mortgages, at least, this was a 25-year amortization we were looking at. Starting mortgages, typically, I found, I did some research on this, it's like 3.1% mortgage rate from a brand new mortgage is typically where the interest versus principal is almost 50-50. And as you go down, it extremely goes to the initial loan side of your payments. And as you go up in rates, it extremely goes to the other side where like most of that payment, 70% or more of that payment is going to the interest. Now, I will quickly give you example number 2 because it's the exact same numbers. I'm just using a $500,000 mortgage. So their payment was $2,100 a month. In those first 5 years, they paid $100,000 to the initial loan. They paid $28,000 to interest, and they're renewing with $400,000 left on their mortgage at a 3.8% rate. Their new payment is now $2,400, so roughly gone up $250 to $300 a month. Again, that's a 12.5% increase on your payment. But in the next 5 years, based on that rate, your payment $68,000 is going to principal and $74,000 is going to interest. So I am worried for Canadians that are going through this. You know, the variable rate mortgage holders have already dealt with all the pain and they've come out the other side with not as much of, I just felt like there would be more damage based on how bad that was. Do you think the fixed rate
people are going to be worse off then than the variable rate? Because the variable rate,
because they haven't been feeling it.
But the variable rate people are like riskier, and they're like, we'll make it work, right? We'll make this happen. And then they did, and now it's got better. It's not as good as it was, but it's got better. But do you think like the fixed rate people are safe people? And
don't you think the fixed rate people would actually be smarter with their finances than the variable rate people?
I think the overwhelming majority of people just set it and forget it. So I think there's the fixed rate people from when I did it in early 2021, I think most of them will end up with a shock within the next 3 to 6 months here.
Yep.
When they go back and go, oh, what's going on here? I mean, really, even the shock isn't this time around. It's going to be another year away. We're still 15 months away from the big shock. From the
big one where the prices were the highest when they bought. And that's something that I should have brought up here.
Nobody took after March.
They were all taking variable just because the stress test allowed them to be qualified for more because they were getting qualified at, instead of 6 or 7, they were getting qualified at the 5.25, right? That's why they were going variable, as the bond yields and the fixed rate were already way ahead. They had already gone up significantly by that point. So then maybe shouldn't that say that the ones getting closer to the absolute peak of the market, they've already been burned because they took the variable? They've already rode the wave and they've felt the shock already?
I think the overwhelming majority of them have, and they've rode the wave, and I think that's what's going to make it the speed bump, if you want to call it that.
Yeah. So there you go. I'd love to know what people think about that in the comments. I think it is a very real thing. What do you got there? You got notes?
I just did math on my renewal.
Okay, so tell me what real life situation with Steve. What's the difference? Is this on your house or your investment property?
The condo.
The condo.
The house is already taken care of. I did that this year.
Okay.
Right. I'm sitting at a 409, I think. Is that what I'm at? See,
Should've-
nobody can
should've
even remember where they're
Should have
at.
gone variable, eh? You'd be a lower rate right now.
Not with my bank.
Oh yeah,
Although
you got the
my
Manulife
HELOC
stuff.
side is down quite a bit.
Right.
Manulife actually does not offer a like discounted variable 5-year product like that.
No, eh?
They actually don't. So I did my condo. The current payment for the last 5 years has been $1,354 per month.
Okay.
Then when you
At what rate? What's your rate?
189.
Yeah. Okay. Yeah.
Nice, right? Nice. So then I looked at what the balance would be after the 60 months and then plugged that in at 389 variable because I assume that's where I'll be. Maybe I assume this time I'm going variable because with bond yields right now spiking, I'm assuming that means the 5-year fixed rate's probably going to be in the
Fours again.
399 to 439, probably pretty safely.
Yeah.
So I'll likely go variable. And that's going to increase. If I get a 389, it's going to increase my payment on a 25-year now because I took a 30-year originally up to 1685, which is a difference of $331 per month.
What's the percentage increase?
I do not know. 331. What is that? 1, 2, 3, 4, 20 plus percent.
So there you go. There you go. Okay. So because you went from an under 2% rate to you're assuming
almost a 4.
Almost a 4.
Doubling,
so yeah, you were
doubling.
more than doubling. Okay. Realtors, it's time to up your game. Realty Ninja allows you to create a stunning lead capturing and hassle-free website that looks great and will match with your current brand. They are a sponsor of this show, and they're giving listeners 20% off your first year, and you don't pay $1 until you launch. Join the thousands of real estate agents across this country, including Steve, the cheapest person I know that uses their services. RealtyNinja.com/Tom. And now back to the podcast. And then the interest versus principal payment is now going to be shifted significantly too. Yeah. Significant. I think that creates more harm that people don't see. Like most Canadians will get their renewal and go, shit, my payment's up $400 to whatever dollars per month. Yours is $300. And they're gonna be like, that sucks. That's what they're gonna focus on. I think you got to focus on, now listen, you were getting it so good before with your payments, how much was going to the initial loan. That was like something that's not going to come back for a long, long time. And you're being shifted back in. There was almost like those 5% mortgage rate, or sorry, 5-year 2% mortgage rates were almost like rent control. And now your landlord's selling and you got to move to a new place and you're realizing the reality of the current market and you're not protected in your little zone anymore.
So it was my original renting price or rents that I got was $2,100 and my carrying costs were about $1,950. That's everything in. That's property taxes, insurance from square one, everybody, right? And now it's $2,650.
Your carrying costs?
No, the rent.
Oh, the rent. Okay.
Sorry. So if my carrying costs go up, I'm assuming my strata fee went up $50 or something like that over the course of 5 years.
Did your taxes go up?
I'm sure my taxes went up. But I don't think my expenses went up as much as
rent.
The rent went up. It's probably very close, actually.
Right.
I'm going to say my cash flow is probably going to be very similar as before, which is, I mean, not much cash flow. That's actually what I look for in a rental property. I just want to supply nice, safe housing and it not cost me something. I don't mind breaking even because then you don't have tax problems.
Right.
Right. Rental taxes are brutal.
But let's dig deeper into this because you're thinking, okay, my cost to run this is now up because mortgage, maintenance fee, and taxes, but rent has also gone up from when you purchased it. So even if they're the same, okay, even if it's like equivalent to each other, you're talking about breaking even. It's like, yeah, but before when you were breaking even, way more of your payments to break even on paper were going to the initial loan amount.
Yeah, true.
Now you're breaking even on paper. It looks the same, but the loan's not being paid down nearly as fast because of the higher interest rate.
Should I do that calculation?
Well,
I did not do that calculation.
That would be interesting to me is like what percentage I mean, listen, I can tell you based on these numbers, it's like if you had a under 2% rate for those first 5 years, if you look at the end of it, it would have averaged out that you would have been 75% or more to initial loan on those mortgage payments.
Okay, so the new loan amount, if I'm right, will be $638 principal on the first payment.
Yep.
To almost $1,050, $1,047. So it is switching. Right now, it's very close to 50-50.
It's only 50-50 right now?
Well, let's go back.
I feel like it would be higher. Now, there's no way. Under 2% rate, there's no way. Oh, maybe because it's a 30-year loan, not a 25. Maybe that's why.
I was also looking at, it was a 30-year loan.
That's why, yeah.
I was also looking at, let me go through. What did I pay? $455. This is entertaining. There we go. That's the right number.
Nothing like dead space in a podcast.
Okay, let me. Oh, never mind. My mortgage calculator just gave me an ad, so I'll give you a second here. I don't pay for a mortgage calculator.
Here's the point. The point I'm trying to make, and we'll move on to the next topic here, is I think this is a very real thing. I think payments will go up for many Canadians. They will put some into really tough positions. All my words are coming together there. I think people should be more aware of where your payment is going, not just the increase in payment you're going to get. And looking back at those first 5 years and recognizing that without you even knowing, because of how low your rate was, you were very aggressively paying down the initial loan. So that's the one silver lining, is that after the first 5 years, the actual loan amount has come down a lot because of how low your interest rate was. Because on top of all of that, it's like you're in a weird kind of situation, Steve, where you bought in 2021, but your condo's still worth a lot more than you paid for it. That's not the case. But most of the cases here in Toronto is like, not only is it not worth more, but it's you're down. You're down 10%.
I'm cursing the most recent listing in my condo complex. Okay, so I did it here. And yeah, it's basically, when you actually look at the actual numbers, obviously this makes sense. The interest rate almost doubles, or basically doubles. So the interest basically doubles. Yeah. So the interest I was paying on my first payment was $585. So now it's going to go up to $1,050. Right now, that was the first payment, so it was $700. Now it's like $800 right now. So yeah, like currently it's $850 per month, $838 per month, and $515 or so going to.
Yeah, and so the difference in your payment, that increase of 20%, that's just interest.
Yeah. Oh yeah.
Right. That's what it is. I mean, I know that's simple when it's a mortgage rate, so it's doubled. Of course, it's interest, but that's the difference that you're paying. It's not even like
saved everybody 20 minutes.
No, maybe this is nerdy of me. Like, I've gotten so into this recently because I want people to understand it's more than the payment's going to be what people talk about. Where the money's going and your long-term paying off that house, I think, is a really important thing as well. Let us know in the comments. Do you have a mortgage renewal coming up? You probably do. 30% of you watching this, if you have a mortgage, you're going to fall into that category where you have one coming up in the next little bit. Is this a concern for you? Is it going to make you have to change your lifestyle? Is it going to make you have to list your property? If it's an investment property, are you going to keep it? Are you going to sell it? Has your rent gone up as much as Steve's rent has gone up? Probably in Toronto it has, because even though we're down, rental prices are still like way higher than they were in 2020 and 2021. They're just lower than they were in the peak of 2023. Moving on.
Can I do my next Christmas riddle first?
Oh, sure. Please. Please.
Okay, Tom Storey. How much does Santa's sleigh cost?
How much does Santa's sleigh cost? Oh, I'm stumped on this one.
Nothing. It's on the house.
So stupid.
So dumb. My kids have been loving this week, by the way.
Is that a riddle or just a dad joke?
Whatever you want.
Is that a riddle?
Isn't a riddle. Every riddle a dad joke?
I guess so.
Wait till I actually have a trivia question for my last one. We'll save it to the end of the episode. And It is a banger, because I'm assuming everyone will get it wrong.
Well, with that down, let's move on to topic number 2. As we wrap up this year, a lot of the national real estate companies here in Canada put out their outlooks, projections for 2026. Now, Some of them have been picked on in the last few years because they've been wrong and they've revised their projections. And trust me, I get it more than anybody. When a real estate company comes out and says that we think home prices are going up, it's like, well, yeah, of course you hope they're going up because that helps your business model, right? Well, that's not necessarily the case going into 2026. So Royal LePage, which is the company that I work for here in the city of Toronto, they have put out their 2026 market survey projections. Did you get a chance to look at this yet, Steve?
No.
Because some of them were very surprising to me. So we had, for all of Canada, they believe that the aggregate home price will go up 1% in 2026. So the entire country, 1%. But that's going to be 2% on single family detached. And they believe across the country, condos are going to be down 2.5%. Interesting. Not really sure why we care what the entire country does because we all own real estate in specific places. So I'm going to go through the different cities here and tell you what they believe is going to happen. And there's this trend here where if you speak French in your city, your real estate prices are probably going up in 2026. Greater Montreal area, they believe the overall market will be up 5% in 2026. They think that single family detached is going to go up 6%, but they believe that condominiums will fall 2.5%. GTA, Greater Toronto area.
Buying a home is a big deal, so don't let your home inspection cause you more stress. For over 45 years, Carson Dunlop has helped buyers across Canada understand the homes that they are buying with detailed, calm, clear, client-first inspections. Carson Dunlop inspectors don't just point out problems, they explain what really matters in a way that will protect you in your home purchase. If you want confidence in your home inspection, top agents and home buyers trust Carson Dunlop. So to check out where they service and to book your inspection, go to carsondunlop.com right now.
They believe...
Hang on one sec, though.
Yep.
Greater Montreal, I'm just looking at your list here.
Mm-hmm.
Single family right now is $750, and they think it's going to go to
almost $8.
$796.
Mm-hmm.
So, I mean, we're not talking astronomical numbers here.
It's still $50,000.
It's $50,000, but to say that it's going to go up 6% isn't that,
because the number doesn't start at 1.5 million. Sure, right? That's
totally.
It's a exactly.
Much smaller numbers.
Greater Toronto area, where right now we're looking at like 1.1 million average, even though there's obviously lots of properties you can get under that. They're saying that just the general market in Toronto is going to be down 4.5%. So they are not too optimistic about the Greater Toronto area. They believe that single family detached will be down 1%, and most of the biggest drops, they believe the overall condo market in the GTA is going to go down another 6.5%.
Mm-hmm.
Interesting, right? So one of the first outlooks I've seen in years where there's negative numbers attached to it from a national real estate company. Maybe because they've been wrong the other years. Now that they're negative, the market's actually going to be positive. We'll see what happens. Moving on to Greater Vancouver. So we're talking about like 1.2 million for the general market. They expect a 3.5% decline for single family detached, which Steve starts at almost $1.7 million. They expect a 5% decrease, which would knock $100,000 off your house price. Is that what you think for your market as well?
Oh, I think that's just happened.
What about for next year? Because this is 2026.
I don't see it not stopping at this point. So the question is, when does it, like, what do we come out at? Actually, there was a very good comment on one of maybe my main channel the other day that was like, this is just normalization. And what they did was they took an amount from previous and then put like a smaller increase on it. So I want to say like 4% or something.
Yeah.
And then they did the calculations off of like 4%. And I'm like, wow, that's actually pretty accurate to today's
where it
pricing
should have been.
Yeah. But
if we
like
didn't go on the roller coaster,
the crazy roller coaster, if you're going to call it that, or the low interest rate inflationary end of the Trudeau era that we went through. Like, if you erase that, that's probably where we're going to end out. And I was like, oh man, that's actually probably not. Now, what I disagreed with is when they averaged out that 4% per year or whatever it was, like the next 2 or 3 are not going to be that. We're probably going to go down for another year and then sideways and then another skyrocket on the other side. I mean, that's what the market has always done. Mm-hmm. You have to go through some sort of years for some reason where we see 15% growth and we can't just see 3, 4, 5, 6 per year all the time. Right. So I feel like I wouldn't be shocked. So in my neighborhood, at the beginning of the year, houses were selling in the 1.65 range. Mm-hmm. Now they're selling in the 1.55 range.
So there you go, right?
Do they get to 1.45?
Guess we'll find out.
I mean, I'm looking at the houses. I just was talking to a guy that sits next to me here in the office, and we were talking about a place that his buyer just locked up in a very prestigious neighborhood in Surrey, if there is such a thing. And that price was like, I'm talking $400,000 less than I thought it should be.
Really?
Yeah. And I was like, man, that's actually one of the neighborhoods we're looking at. And I'm like, that's even worth it now to buy it and maybe reno it.
Time to upsize for Steve.
It's coming. It's coming. Got to finish reno first.
All right. Let me go through the rest of this list. Ottawa, they expect 2% increase in general home prices. Quebec City, 12% overall. They expect single family detached to go up 14%, and they expect condos to go up 5%. What the hell is going on? Can someone please fill me in on what's going on in Quebec City? Why is this happening there and nowhere else? Calgary is finally cooling off. They expect a 1% increase in that market. Edmonton, same thing. They were going through their boom. They're expecting a 2% increase. Halifax, 2%. Winnipeg 1.5%, and Regina 4%. Steve, looking at these numbers, is there anything that surprises you? Is it on trend with what you like? I mean, we only work in 2 of the markets referenced here, so we can kind of compare it to what we see
I'm looking
ground
at
level.
The single family detached home prices in everywhere other than Toronto and Vancouver, and going, some pretty affordable homes, right?
Yeah,
like a lot of those are basically, if you look at the mortgage, 4 times income. If you have $100,000, it's not crazy to have $100,000 earner these days. Like, that's not insane.
Well, no, and it's household income, is it not? When we're comparing the home prices,
household income as well.
Is that not? Well, is that not the general? When we're saying income versus house price, is it not household? Maybe not.
How many tradesmen these days are making under $100,000?
I don't know.
Like, if you're, although maybe they're the ones making $100,000 building the skyscrapers in Toronto.
And they're living in Toronto, not living. Yeah.
So that could be.
Yeah. So that's actually interesting, right? Regina, we're looking at single family detached, 436 average price. Winnipeg, 453. Halifax, 600,000. Edmonton, 521. But what Edmonton must have been 250 5 years ago, right? Calgary.
Condos in Edmonton, $200,000.
Yeah. But
there's affordable stuff in Edmonton, guys.
Yeah, but
But you can live in
Edmonton. Calgary single family detached is over 800,000 now. There's no affordability. I mean, relative, there's affordability compared to Toronto and Vancouver. Calgary is right there. Mm-hmm. And Quebec City. So we talked about this fact that they said that they believe there'll be a 14% increase in single family detached. That's because currently their single family detached is $470,000. So they're expecting it to go from 470 to 536. Still, maybe learn French and move down there, Steve.
So Calgary is now surpassed. So when I was growing up, it was Toronto was the number 1 city, then Montreal, then Vancouver. Now it's Toronto, I would assume, Vancouver, and now has Calgary even surpassed Montreal? Has all their French isolationism? No, I'm just talking about like being the city in Canada.
Subjective, right?
But like, I wonder if
population-wise, I would assume
the kind of French, or what do they call it? Francophone isolationism.
Sure.
Ooh, big word for us. Suppresses them heavily. You know what I mean? Like if it's actually holding them back, and maybe being held back is a good thing.
Right.
I don't know.
Maybe. I don't know. I found this report very interesting. They expect the decline to continue in Toronto and Vancouver, which, just to put it in perspective, they're saying that Toronto going from 1.1 million, the market gets to 1,054,000. So I guess it is a decline, still very expensive. In Greater Vancouver, almost 1.2 million to 1.15. That's kind of the numbers that we're talking about here. They seem to believe that most markets, condos and the bigger markets will continue to go down more, which is a pretty fair outlook on the market. And that single family, at least in Ontario and BC, for most of it, at least, you're not seeing much increase. You can continue to see decreases. Let us know in the comments below what you think about that. Do you agree with Royal LePage's report? Maybe we'll link it below as well so they can look through it themselves. There's a really good chart, and it's probably everywhere in the media by the time this episode comes out. With that down, Steve, do you have another riddle for me, or can we jump to the next topic?
I'm going to save my last one till the end.
Okay. I'm going to let you take over here because you did a video on like a new type of mortgage fraud that you believe is existing. Break this down for me.
So there's a new play in mortgage fraud, which isn't a new play, but it's the current play. It's like a classic car. I guess it's been brought out of retirement. So what we're seeing, I haven't seen it personally. I've heard rumors around the office, and our managing broker in our monthly sales meeting warned us that they have
seen it. Okay.
So usually you'll get, have we talked about this or no?
No, me and you have talked about this on the phone because you're like, I think this is happening. This is weird. I'm going to look into this. Yeah. But not on the show.
So, basically the play is a cash back in the contract. So, but usually a cash back on like a separate addendum.
Sure.
Of which then the bank probably doesn't get access to.
Right.
So I'm trying to figure out like, how does this work? And it's actually interesting because I remember I actually did say to you one day on the phone, I think, or maybe even when I was in Toronto, like, I think this is happening and I think this is how it's happening. And then I was recording the video that day, and the day I was about to record the video, the BCFSA, our regulator, sent out a thing saying, this is happening. And it may be mortgage fraud. So let's say, for instance, I get an offer on one of my properties and it says, you know what, we'll give you this price. Maybe it's full asking because I'm overpriced.
Sure.
Or maybe it's over asking. Could be, which isn't crazy for banks to see $100,000 over asking anymore because it's been a traditional kind of way we've gone over the last few years to go over asking. But then the buyer asks for $100,000 cash back
from the seller,
from the proceeds of the sale, however it's going to be, from the seller or whatever it is. So essentially netting the seller $100,000 less. So let's say I'm
so they're reporting a different price on MLS than the true sale price because there's a cashback.
Well, here's why I thought it would happen. So I saw or why I think it was happening, because I had a client do an evaluation, and we were evaluating, I think he's worth $880 to $900. And there's a recent sale at like $885. So I was like, okay. And then the next sale posts a few days later for like $975. And I'm like, this doesn't make sense. So why would they ask for the cash back? This is what I think is happening. I think you can't afford a property, Tom. So you can afford the payments, but you don't have the down payment. So you need $90,000 down payment.
But how do you get the cash back before closing to put into your down payment? That's what I don't understand.
Let me work you through that.
Okay.
I've spent a lot of time.
Is this not called like the Oklahoma or something? There used to be like a law that you couldn't get funds from something to fund buying the thing.
Well, we'll get that
specifically in real estate transaction.
Okay. We'll get to that in a sec. So, now you can afford the payments, but you don't have the down payment. So you say, you know what, I need $90,000. Steve, will you lend me $90,000? So I give you $90,000.
You're the seller.
No, I'm your buddy.
Okay.
I'm the friend of your mortgage broker. I'm your buddy. I'm the guy from your place of worship or your neighbor down the road. We're just good friends. Maybe I'm your family. And you come to me and say, you know what, I need $90,000. So what I do is I give you that 90 grand and you put it in your bank account for 90 days. Because after 90 days,
It's
nobody asks any questions about where that money came from. Then you go buy a house that you want and you ask for 100 grand cash back. So let's say, for instance, it's $1 million listing. It's only worth really 900. Everybody knows it's only worth 900. So you offer $1 million and you get your whatever it is, 10% down payment or close to it, whatever that number is. And then you give me 100 grand cash back. I get the 100 grand cash back and you get the 100 grand cash back because you're the buyer and you give the 100 grand back to me. So I just made 10 grand and you just bought a property with 0 down. And the banks don't know about it because they have now, if there's a reason.
Why would a seller agree to this?
Because they want to be sold. Now here's
is this technically fraud?
If the bank knows about your cash back, it's not fraud.
Wouldn't the cash back have to be in the Schedule A?
If it's on a separate addendum, page 1 of 1 to the contract. Now we're going to get there. Let me keep working through it.
Sure.
So you've just bought 0 down. Everybody has to be complicit in this. Maybe not. There's a way that maybe the seller's lawyer doesn't know because the money's flowing through, but really the person that's really on the hook for this one is the buyer's lawyer, because the buyer's lawyer is not only working for the buyer, they're also technically working for the bank. So the buyer's lawyer has to be able to fraud the bank and say that, yeah, this might, because they're not going to tell them about it. Now, there's reasons why the bank may or may not allow cash back. Usually they don't, because there are laws that says this is your minimum down payment. This is how much skin you have to have in a game. And this is your loan to value. All these different things where usually you're not going to allow cash back. And I'm not talking $1,000 for, decorating allowance or whatever it is, right? Like the banks have to know about it. They have to be okay with it because it still has to fall within their compliance. So that's not happening. And I've heard of one. There was somebody here in the office, and they did not accept the deal. They did the right thing. They went to the managing broker. Like, listen, it doesn't make sense why they're asking for $250,000 back. Now it was a much higher value property, but they were asking for $250,000 back. Crazy.
I have questions.
Mm-hmm. Why does my beard look so good?
Yeah, the fact you're going through something so serious wearing that is very funny. But for the new owner of the house, you've borrowed money from your friend, given it back to them, but you still have a mortgage that's $100,000 more on the house. So
you bought 0 down.
No, but there's still a mortgage on the house from the bank.
Yeah, for $900 in this case.
That's what I'm saying.
10% down. Yeah,
which is more than the value of the house should be.
But what you want is a home. Well, it's the value of the house was $900 in my scenario.
What's the benefit to give your buddy 90 grand to sit for 3 months to maybe get 100 grand back? That's a risky ass play.
You make 10 grand.
Yeah, but like
that's a pretty good percentage on return.
I don't think so. Not based on the risk involved, and assuming that this could maybe be very, very illegal.
10 grand's 10 grand. Tax free.
I know. 10 grand on 10 grand is good. 10 grand on 90 grand.
You're thinking like a smart person who's not trying to fraud things.
I just don't know how many friends are going to lend the money to even move this thing along. I don't. That's a weird one to me. Who the hell would do that?
Cousins.
So they're going to their friend and going, "Hey, Steve, I need to borrow $90,000 from you as a gift for my down payment,
or the guy lending the money. The guy lending the money is like, "You want a house? Let me help you do that." He knows he's going to make 10 grand. Maybe it's the guy lending the money that's doing it. I don't know. I'm not involved in that world. I'm just saying the reason I wanted to bring it up here is I wanted people to know that it's happening. I wanted you to know that if you're doing it, you're going to get caught because the regulator is
happening in
you.
Steve's market. I've never seen those clauses in my offers.
Yeah, it's not happening a lot, but it's happening. Here's what I was surprised. I put out a video on my channel about it, and the amount of comments that were on it that said, what's the big deal? Who cares? Screw the banks. And things like, oh, in the US, they've been doing this forever, right? Like whatever this play is that they're doing. And it's like, yeah, except for the fact that if your lender that you're borrowing from thinks you have 10% in the game, 20% in the game, whatever you have in the game, and you don't, you're committing mortgage fraud. But I was just shocked at the amount of people that were totally okay with the amount of mortgage fraud that, you know, so because you hear all this thing like our market's so screwed up because of mortgage fraud. And then I'm telling people that mortgage fraud is happening. And then they're like, yeah, screw the banks. But it doesn't actually screw the banks. Who does it screw the worst? It screws the next buyer in that complex. Because now your comparables...
That's a comp that's way higher than it should be. Yeah.
Now your comparables are starting to be skewed because they're showing higher sale prices. So the sellers are expecting more, and a buyer may rely on 1, 2, or 3, or 4 of these fraudulent sales to make their determination of where market value is in the future.
Got it.
And now they're going to overpay, which is going to prop up that. But a lot of the sellers that are just trying to save face love the fact that their MLS sale price says this high number. So their friends can't go, oh, you lost on that house or whatever. It's a legitimate thing. And I was disgusted by the YouTube comments of the people that were supportive of it.
I guess the idea there is bank screws you. So if you can get a leg up on the bank and it's not technically illegal, then I would assume that's where that thought process comes from, right?
I don't think the bank screws anybody. I don't think people getting the money don't realize what they're doing.
That's probably a better way of putting it.
Uneducated.
Yeah, but the bank doesn't give a crap.
Where I don't like.
But the bank also doesn't give a crap about you. They don't.
Correct.
I've said this. Banks have many nice people that work for them, but the general, like, they don't care about you.
That's why I think it's crazy when people are like, oh, I'm going to stick with my credit union because they've been good to me. They don't give a rip, dude. They're not that good to you.
Yeah.
Like, if you can get a little better rate somewhere else, you should probably do it. Because the bank, if you miss a payment, they're not going to be like, oh, okay, well, you've been good to us. So
do you remember, I was looking back at an old episode that we were recording. I don't know, it must have been 2 years ago. Do you remember when like all those news articles came out that TD was the most shorted bank in the world? What happened to that? Where did that go? There was like, get your money out of TD, get it out as quick as possible. Like crazy stuff. And then I haven't heard a word about that.
Have you seen the bank stocks lately? Have you seen RBC? I think RBC's doing as good as Nvidia. Like it's like straight upwards. Everybody was like, oh, I just want to get my 3% from RBC and no, it's not like that. It's craziness. And it just makes me wonder. So it's probably because tied to the fact that they've got all these mortgages in at 6%, and now they're borrowing the money for those mortgages at 3% or less.
Yeah.
Right. They're making money hand over fist. So
yeah, when the interest rates go up.
Canadian banks are strong and will remain strong forever. This is not investment advice, but look at some ETFs.
For home insurance of any type, I use Square One. Go to squareone.ca/the Tom Storey Show to buy your tenant, landlord, or homeowner insurance policy and save $20. That's squareone.ca/the Tom Storey Show and save $20.
With that down, I want to move on to a fun part of the show today. We always like to kind of do a little bit of a year of review and give the listeners a little bit of like behind the scenes on what's been happening with this show, how we look at the analytics.
I'm just trying to figure out where you're going with that.
Okay, no. So I want to do a quiz that I'm going to ask Steve the questions, but I'd like everyone to play along here. And this is just like, if you watch the episodes and you know me and Steve on a personal level, because we've been doing this for over 3 years now, and you know who our guests are, I should say. You know that I can barely put a sentence together. You know that by now. I want to ask Steve some questions, some trivia questions, looking at just 2025, how this show performed, what did people like, what did people not like, how much money did YouTube pay us this year? That's always a fun one. Keep in mind, if you've looked recently, Steve, I pulled these like 5 days ago, so it might not be right up to today of us recording. So question number 1, on YouTube, video only, What was our most viewed episode in 2025?
Just recently, I want to say Bill's episode did good, but
It's very close, but it's not number one.
Dan's episode was good. Was that this year? No, that was both of them together.
Mm-hmm.
The Vancouver Life Living fellas?
Number two.
Oh.
By like a few hundred views. Tony Spagnolo.
Oh.
Real estate lawyer.
Good
Our
get for Steve.
Our most viewed episode, at least based on views. I should have checked watch time, but based on views, or 15,000 views on YouTube. So there you go. Real estate lawyers, you should have more of them on the show.
Bankruptcy trustees apparently too.
Yeah, that's a good one.
Beat.
Most downloaded episode only in 2025 on the way that we track it through like Spotify and the app that we have that shows us. And there was two that were by like 50 downloads different.
There was one that was like a You and Me episode, and it was the one where I had like the Pixar characters on the front. I don't even remember what it was, but it was like two birds sitting on a for sale sign or something.
That's it.
Is
You're
that
right.
it? Oh, okay.
It will, and if you go back and look at the title of the episode, you so nicely titled it, Steve. Canadian real estate prices are collapsing. So that's what got the most people to click on the audio downloads, followed by 50 views less. Richard Diaz from the Looney Hour.
Yeah.
His episode did very well on video too, but the audio listeners, based on their preferences, seem to like it even more over there on the audio side.
Most loved guest in our comment section ever.
Oh, for sure. Yeah. Did I tell you I went to the event that they did here in Toronto? They did like an investor series event. I thought they did a really good job.
Cool.
What do you think was our most disliked episode on YouTube? So behind the scenes, even though YouTube took away how many dislikes you can see, you can still click that button, right?
Oh.
What do you think was our most disliked episode? And to put this in perspective, our channel average is like 95% like to dislike. It's pretty positive.
Mm-hmm.
What do you think is our most disliked?
It would have been something slightly positive. I have no idea. I couldn't even.
So funny enough, it was actually an episode with you and me, and it was called.
Oh, is it just you and me?
I'm pretty sure.
I was going to say the rental one we did just recently, the landlord one.
No, that was actually very positive. It was called "This Is What Always Happens to Real Estate After a Federal Election," and you had the thumbnail as Mark Carney, as if he was the Sith Lord from Star Wars.
He is a Sith Lord.
So that was our most disliked episode. I think it was still like an 86% overall like ratio, but it was by far our most thumbs down on an episode, which I found kind of amusing. Total watch hours in 2025. So this is just for YouTube. This does not include the audio platforms. How many? Just tell me how many years, if I collect them all together, how many years it would be in the last year that people were watching us on YouTube if you add up all the views together.
In how many years straight? So you're talking like actual watch time. If one person watched it continuously, how long would it take them?
Only based on the views that we got in 2025. Yeah.
3.5 years.
14 years.
Nice.
Crazy, eh? 122,000 hours of people consuming this podcast.
Like us. You really like us. So subscribe. Get us over that 8,000 for the new year.
Another interesting stat is I was curious after I ran that number. I was like, well, what about the life of the show, right? So 191 episodes. This one obviously won't count for these numbers. Life of the podcast was 34 years and 11 months of people adding up watching us since we started the show. So in 3.5 years, we've got 34 years of people watching it, which is kind of cool. This is a fun one. How much money, not from our sponsors, not from anything else that we have like revenue things with, but just from YouTube AdSense, what do you think they paid us? I should have probably looked. I'll get to the views in a second, but just what do you think they paid us before taxes and us splitting it 50-50? What do you think they paid us?
Below what the average real estate agent makes in a year.
Probably
$1,514.32.
oh, way more than that.
Oh, really?
Yeah, $6,423.
Is that lifetime?
I'm gonna keep going, but I'll pull it up on my. I'm pretty sure that's correct. Yeah, think about it. Think about it.
Keep going. Like I have anything else to say. I don't know what else to say.
Here's a big one. 63.7% of you are not subscribed. So this is actually just a pitch to make sure that you guys get subscribed to the channel. Total views.
No. There's no way. Okay, keep going.
I'm figuring it out. I'm just going to keep going.
Yeah, show your phone to the screen.
Total views in 2025. Video views on the channel.
Does this include shorts?
It includes shorts, yes.
75,000.
What are you talking about? We get like 10,000 an episode.
Oh, wait. You're wrong. Yeah, sorry. 715,000.
620,000. Pretty good though, right?
Mm-hmm.
Yeah, no, Steve, I have it. I probably shouldn't show. But the current number right now is in the last 365 days, just from ads, $6,509.06. There you go, right?
I was right. It is higher than the average real estate agent makes.
Not bad, eh? You want to know lifetime of the channel? Maybe that would be interesting to people. $12,769.92. So well below minimum wage.
The first 2 years we made more. We made as much this year as the first 2 years combined. 2.5 years.
Yes, because that first year until we hit 1,000 subscribers and the watch time, we were making nothing, right? You got to get monetized first.
Huh. Interesting,
eh? And I have one final one here, and then we will move on to our final topic today, which I am heated about, and I shouldn't have saved it till last. But anyways, audio downloads lifetime of the podcast. It was kind of confusing. It said Spotify, 190
on Spotify, and then there's downloads.
It says 192,000 downloads lifetime, which is really cool. But then it says, and then there was another one that said all platforms. So maybe that includes Apple Podcasts. 234,000 downloads just for the audio episodes, which is cool, man. I think, the audio was kind of secondary to when we started this. This is a YouTube show. Crazy that there's a whole different audience over there, which is,
and they can comment on Spotify. So if you're listening on Spotify right now, just give us a thumbs up emoji in the comment section or something. Try and get that Spotify up a little bit. If you're listening on Spotify, though, without your premium or your Wi-Fi or whatever, you don't get to see how fantastic we look this week.
Yes, we look very, very good.
When did you take your nose off?
Well, I can put it back on for the last little bit. I can barely breathe with this thing.
You have to talk like that too.
Yeah, hello. There was two of our sponsors this year that I'm putting into a category of best sponsors. So Realty Ninja and Carson Dunlop. All right. That was just a plug for them because they're great. They're great sponsors. I'm going to move on to my final topic today, and then we will get into the holiday cheer, and everyone can go enjoy your pre-Christmas traditions with your family. Steve, in the city of Toronto, we like to, at least more recently, increase our property taxes. I feel like I have to take off the nose to talk about this one because I'm going to get really fired up about this. Are you frozen or are you shocked?
No, I'm not frozen.
Okay.
I'm just there was a thing about Surrey's property taxes too, so it's interesting.
So our mayor has recently come out and basically said, we're just going to increase the property taxes on homes. No, sorry, not even property taxes. I'm sorry. Land transfer tax, not property taxes. Property tax can go up anyways. This is on top of that. Mm-hmm. Land transfer tax for homes over $3 million, which is only 2% of the people. Okay. So
easiest way to tax.
I want to just, I'm taking this. I want to just give you just some facts Okay. I'm not against having services for people that need it the most, and where's that money going to come from? I'm not against that. Like, I actually very much struggle with everything going on politically because financially I'm very conservative. Like, everything else, I probably lean a little bit more liberal and everything because that's just, I think, just how I was brought up, honestly. So
you've just got early onset.
I struggle.
Conservatism.
I struggle with a lot of these things. Okay, but here's just the facts. My opinion out of this. Here's the facts. Okay, right now, one of the many reasons why the city of Toronto wants to generate more revenue is because they are not making as much revenue on the land transfer tax as they used to because our sales volume is significantly lower than previously. So that's just a fact, okay?
Development charges.
And development charges, which are, there's basically nothing happening there. So in 2020, and this is just the Toronto land transfer tax, not the Ontario one, just the one that we get to pay here. We paid two. We pay municipal and provincial. In 2020, that brought in the city $800 million. In 2021, it brought in over $1 billion, obviously a record year based on the transactions. In 2022, it brought over a little bit over $1 billion, not as much as 2021, but still really good. 2023, when the sales volume really started dropping off, $751 million. The estimate, I couldn't find exact numbers for 2024, but the estimate for 2024, the city thought in their budget, they were going to get $880 million. There's no way in hell that happened because I know what the sales volume did versus 2023. I would guess, this is just my guess, it was closer to like 700 to 750 million versus the 880 they thought they're going to get from it. And they're obviously 2025 numbers are not official yet, but they projected in the budget, they expected $986 million in 2025 from land transfer tax. Our sales volume, it has not been this low since 2003. There's no way they're cracking 700 million. This is just my guess. I don't know for sure. So basically 30%,
an additional
tax. It's already an additional tax. I'm not even talking about the other side of it. So basically from the peak of things, our revenue for the city is down 30% or more. Even from other years where it wasn't as crazy, we're still down like 10 to 15% in the revenue being brought in because less transactions are taking place. Okay, so I just wanted to put that out here before I go through it. The next thing. Steve, do you know what happened? Do you know what you get for land transfer tax? Do you know what happens? Like why we pay that money? Does anything happen when you pay that money? You're just forced to pay it. Can you tell me?
Kicked in the balls.
So, but nothing actually happens.
No, it just goes into the slush fund.
There's no benefit. There's no extra thing nothing happens. You're not paying the tax because it's just like, oh no, I just saved up to afford to buy a house. So now that the city's going to force me to pay them more money because I've done everything I thought I was supposed to do to get to that point. Now, I fully recognize that someone's already writing a comment saying, Tom, you're talking about land transfer tax. Let's talk about real estate fees. Here's the difference. First of all, there are many cheap real estate agents that you can hire. They exist for very low fees. If that's the value that you choose you want, it exists out there. Okay. There are different models for everybody. Okay. But you don't have to use a real estate agent. There is no obligation that you have to use a real estate. You can sell your house privately on your own. No one's forcing you to do anything. If you want to participate in the MLS system, which was built and paid for by real estate agents, then yes, you do have to kind of hire one, but many of them are still very discount focused on their fees. Okay. Even if you sell your house privately and never pay a cent to a real estate agent, the buyer still has to pay land transfer tax. There's no way around this. It's an obligation where using a realtor and paying their fee is a choice. So I just want to make
two of them in Toronto. You don't even get to pay one in Toronto.
For the taxes.
Two of them in
the land transfer tax. So the Toronto side of the land transfer tax was brought in January 1st, 2008. Okay. At that point in time, the average home price was roughly $450,000, which means that just your Toronto portion, if you were not a first-time home buyer, would have been $5,475. Okay. Your total was double that because it was on par with the provincial side when this came in. Today, let's just say realistically, median price is probably closer to $1 million for the city of Toronto. That means that your land transfer tax just on the Toronto side for $1 million house based on nothing's changed. Services haven't gotten better. You could argue they've gotten way worse.
They have gotten
went from $5,475 to $16,475. And then your actual payment is double that because you're also paying the other side of things. That is a 201% increase on the land transfer tax. Well, housing prices, I'm saying only here, only went up 122% because the more you spend, the higher tax that they ding you, right? So the point I'm trying to make is $3 million is a hell of a lot of money. And it's probably going to be a long, long, long time until that's anywhere close to the average home price. That might never happen. I mean, that maybe it will, right? Eventually, maybe, right? In 2100 or whatever. Maybe sooner than that. I don't know. We didn't think prices would be where they were today 20 years ago either, right? So that's just something I want to put out there. Now, I'm going to try to reference all the things I think they're going to be throwing back at me on this, and then I'll get back to the actual point. Real estate commissions, if they stayed at the typical fee that you see for realtors that kind of run a real business, have also then gone up 122% based on what home prices have gone up in that period in time, just based on the percentage of the overall. Again, the difference is, and I can only speak for myself, you didn't used to have to spend $5,000 to $7,000 on staging or $1,500 on photos and media. Everything's gone up. So like good real estate agents make a lot of money. Most make no money. That's just kind of the reality of our business.
What are you saying about me?
I'm not saying anything about you. If you bought for $3 million today, right? And I'm not talking about you came from a rich family. Let's just say like you made it. You really made it. You've jumped up the property ladder. You know, that's obviously a small percentage of people. I get it. But you've got to this amazing point in life that you can buy this dream house you never thought would be a possibility. As of right now, your land transfer tax on $3 million in the city of Toronto would be $122,950. And $61,475 of that going to the city of Toronto, the other half going to Ontario. They had already brought in the luxury tax last year, where it's a sliding scale, $3 million and up, where it hits you with more. So as of right now, if you bought a house for $3.5 million, it would be $152,000, and then we can keep going up and up and up. It's just crazy to me that we think that this is going to solve it, that by charging people more in this secret thing no one can see that you got to pay on closing with your final check to your lawyer, that it isn't out there, but we all do it as buyers. They think increasing that is going to somehow mean more transactions happen, that they can bring in more revenue. It's wild to me. It's wild that they're even relying on something like this so heavily that they think. So it's like the point that was made. I'm going to wrap this up soon, I promise, and get Steve's opinion, and we'll let you all on with your holidays here. The point that was made is this is only going to impact 2% of people that purchase properties in Toronto. So it's only going to impact 2% of people. Then why is it important to take taxes from 2% of people? How's that going to make a big difference in the money coming in? I'm done.
It's disingenuous of them. Is that a word?
Yeah.
Of them, because when you introduce, they did it the same thing here in BC. So when they introduced the property transfer tax, 1987, I want to say it was, maybe Bill Vanderzam, I think, somewhere in there. They brought it in, and don't worry, it's only going to be 1%. 1% on the first $200,000. And then 2% on the balance after that, because the rich people can afford 2% on the balance over $200,000, because only rich people have houses that are over $200,000. And then they increased it again. Now it's like a certain percentage over 2 million and 3 million and 5 million, whatever it is. If they were genuine about it, they would set wherever that luxury number is, and they would tie it to either inflation for increases or home. This is the right finger.
What finger is that?
Or they use it to, or they tie it to average home price. So if average home price goes down, that means the average luxury price likely went down. Therefore, the luxury level is less. But that's not what's happening. What's happening is the average home price goes up and creeps into where those higher taxes are. And now we are all rich. Like that, we had a few videos back where it's like you have to, in order to pay for the minimum down payment,
sure,
you now have to, or the lowest detached home price in cities, you now have to be in the highest tax bracket. So everyone is technically rich because they can tax everyone. Right now, I promise you, Tom, likely in your and my lifetime, the average home price in your city and my city is going to be $3 million. Not because, real estate, whatever, not because of any of that. It's because of the devaluation of the currency. And the government actually wants that so they can pay their debt, right? So if they were genuine about it and they really wanted the rich to pay, they would tie it to making sure it's always the rich that are paying. But that's not the case.
Because everyone eventually gets to that point that you used to deem rich, but it's not anymore.
Because it's still in BC to this day. 1987, it was said that the 2% kicks in at $200,000. It still kicks in at $200,000 now.
Right.
So it's not 1% on the first 200, 2% on the balance up to 2 million, and then more and more and more. It's 2% minus $2,000 because it's always over $200,000.
At least if you're going to come in and say we're going to increase the taxes on the people buying the most expensive properties, then also at the same time say, and we're going to make sure that the first-time home buyer rebate is extended and it's more money than now. So we're going to help people get into them. At least don't just come out and say, well, we're just going to do this, but we're not going to help anybody else. And for the person buying the $3 million property, there's also like a chain effect here. They're selling the $2.2 million property that's being bought by the person selling the $1.5 million property that's being bought by the person selling the $700,000 townhouse. Like there's a chain effect here of things happening and potentially more transactions taking place.
Well, the city of Surrey is going to see a shortfall. They just got a budget tabled, I guess, by their accountants. And the mayor actually voted against it, the budget, because it was to increase Surrey's budget by, I want to say, $92 or $98 million. And it was going to increase property taxes by 18.2%.
Yeah.
In 1 year. That's from the previous 13% we had. Nobody wants to talk about the mismanagement of those fees, but is it mismanagement, or have they relied so heavily on development fees for the past while that they've just started spending? I mean, hey, if my income goes up to $500,000 a year, I'm going to start spending like I earn $500,000 a year. And then the year that 2025 is that hits, and then you only make $125,000 a year. I just wish I had the ability to go, somebody, you know what? You just make up what I used to be making.
Well, the political side of this, at least I have to give credit on, is coming out and saying we're going to increase the land transfer tax percentage on homes over $3 million is a much easier sell than saying I'm going to raise your property taxes for everybody next year, right?
Correct.
That's like the smart, like I get the way it's being
power.
Sure, which is all they care about. There's an election coming up for Toronto mayor next October, and there's going to be a lot of people running. A few we might have on this show in 2026. Are you frozen again?
No, I'm not frozen. I just can't wait to speak to Miss Chow.
She has not agreed to come on the show, but others that might be competing against her have been. And we're going to be asking these questions and trying to, I get that like money has to come from somewhere, right? But it's like, are we
just a serious show? Tom Storey asking serious questions.
Yeah. Anyways, thank you guys for being here.
No, we're not done.
We're done. We're done.
No,
What
we're
else
not
do we
done.
have? We've already
We're not
gotten
done.
long. What do you got?
We have gone long. It's a Christmas special. We're allowed to go long if we like. If people don't want to tune out now, they can. I have a trivia question for you. It's not a riddle this time.
Okay. Go on.
Tom Storey, in the movie or book, whatever you want to call it, A Christmas Carol by, was it Charles Dickens?
I don't know.
I can't remember. How many spirits visit Scrooge on, I guess, Christmas Eve or whatever day it is? And for bonus points, what are their names?
Certainly don't know their names. Is it 12?
Have you not seen A Christmas Carol?
Honestly, no.
Are you real life?
Is it 4 spirits?
You name them?
Sleepy, happy, grumpy.
You're such a Gen Zer. You don't even know this stuff.
You know what?
So
This year for on Christmas Eve, I'll watch Christmas Carol if my kids will allow me to put it on.
do not watch.
Not with them?
I watched the Jim Carrey one with my kids, and my 8-year-old was like,
Was scared.
the answer most people give, and you ruined my joke just like I ruined yours a couple weeks ago.
Oh.
The answer most people give is 3. And the answers for their names are the ghost of, or spirit of, ghost of Christmas past, ghost
past,
of Christmas present,
Yeah,
and
okay.
ghost, I think it's ghost of Christmas is yet to come. I don't think it's future.
Future.
But those are the 3. But everybody forgets the other ghost that visits him. And his name was Marley. There you go.
Is that a
makes
joke
sense.
or that's just
No.
that's just
The first, he gets visited by 3 ghosts, but there's a ghost that comes to tell him.
Hey, I
that
said
he's gonna
4.
get-
My second answer was
You were
4.
actually right.
Yeah.
You actually also were the closest ever to Olive, the other reindeer. Olive was such a bully.
But when I
Bitch.
said olive, I wasn't saying olive. Like
I know.
I was
That's
saying
the
all
pun, Tom
of.
Story.
Yeah,
That's
no,
the
I know,
pun.
but I didn't know I was answering it correctly,
You were the
even though
closest. Everybody's like, Dasher.
and Prancer and Donald and all right, guys.
He's a duck, not a reindeer.
Wait, and Mickey and Minnie. All right, thank you guys for being here. In all seriousness, happy holidays.
Merry
Thank you
Christmas.
so much for listening to our podcast this year. We've had so much fun doing it. Merry Christmas, everybody. And we'll have another episode before the new year, but enjoy. Thanks, guys. Have a great day. Bye.
Merry Christmas.